Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial world's most intricate documents, and sometimes it's a real wild ride. Let's just say that today we are diving deep into Panamera Holdings Corporation, their Form 10. K filing for the fiscal year ended the 31st of July 2025, and let me tell you, we have a lot to unpack from the get-go. This is not your typical smoothly running business, it's a company facing significant hurdles, and we are going to break down exactly what that means for investors and for the company itself. So first off, this document is called a Form 10. And it's basically an annual report companies file with the United States Securities and Exchange Commission, or SEC for short. It gives a comprehensive overview of the company's business financial condition and its future prospects or lack thereof for Panamera Holdings Corporation. This annual report gives us a detailed financial picture and a good look at their risk factors. Now you might notice Panamera Holdings Corporation has common stock. With a par value of just a tiny fraction of a cent, this often indicates a company in its very early stages or one that has gone through significant financial restructuring. Before we even get to the numbers, the report dedicates a whole section to forward-looking statements. Now, this is important because companies use these to talk about their future plans and expectations, but they always come with a big disclaimer that the actual results could be very different. This is where they kind of hedge their bets, listing out all the things that could go wrong, and boy do they list them. And when you look at their risks, you see a recurring theme. They desperately need more money and they are not even sure if they can get it on good terms, or all this casts a really big shadow over their ability to keep operating, which is what they call a going concern issue basically. Are they going to be around next year? The company itself admits they have major problems with their internal controls, meaning how they manage their financial information and make sure it's accurate. And they also point out a critical issue, a lack of proper segregation of duties, because they do not have an audit committee and their finance team is understaffed. This means there is a higher chance of errors or even fraud going unnoticed. A big chunk of the voting power for this company is held by one executive officer. This means that individual has a lot of control over major decisions, and minority shareholders might have very little say in how the company is run. That can be a double-edged sword. It can lead to quick decisions, but also potentially decisions that only benefit the majority owner. Panamera's business history is quite short, primarily focused on getting money and dabbling in areas like scrap metal recycling and consulting. They are actively looking for new business opportunities or mergers. But this is a risky game, especially for a company that has not yet established a solid revenue stream. Now let us look at the numbers. The financial tables tell a story of struggle for the year. Ended the 31st of July 2024, Panamera Holdings. Corporation reported total revenues of just over $19,000, but a cost of revenues of over $11,000 and operating expense of a massive $15.2 million. This resulted in a net loss from continuing operations of over $15.2 million. You can see a huge impairment loss of over $7.5 million, likely tied to a failed acquisition or investment. Fast forward to the 31st of July 2025, things are looking a little different. Revenues jumped up to about $241,000, which is a big percentage increase from the previous year. However, their cost of revenues also shot up to over $179,000, and operating expenses, while lower than the prior year, were still over $607,000. This still led to a net loss, but a much smaller one at around $536,000, the significant improvement in net loss seems driven by the massive reduction in operating expenses, primarily the elimination of that huge impairment loss from the prior year. Looking at the cash flow statement, Panamera seems to be burning through cash operating activities, used about $99,000 for the year ended the 31st of July 2024, and then a much larger $515,000 for the year ended the 31st of July 2025. This indicates that their core business operations are not generating positive cash flow and they are becoming more reliant on external funding. Interestingly, there is a significant deposit for a license of over $639,000 in 2025. This appears to be related to a new venture involving what they call target innovation systems for carbon conversion and clean energy technologies, a big bet on environmental technology. The accumulated deficit is now over $23 million. This is the total of all the net losses the company has had since it started. That stark number highlights how much money has been lost over time. When you look at the ownership structure, T. Benjamin Jennings holds about 28.79% of the company shares and is the chairman, CEO, and president. This executive officer has a significant stake and a lot of control. A key event mentioned in subsequent events is a license agreement with Raincage Carbon Incorporated. The company is securing rights to carbon conversion and clean energy technologies. This involves a substantial upfront fee and a grant of 27 million restricted common shares. This is a major strategic move and a significant financial commitment. Now for my take on Panamera Holdings Corporation scroll. Panamera Holdings Corporation is in a very precarious position. Their business model seems to be in flux, constantly pivoting to new industries like environmental tech and carbon conversion. While the increase in revenue and decrease in net loss are positive signs, they are not enough to overcome the fundamental issues. These are not the numbers of a thriving business. They are the numbers of a company in survival mode, relying heavily on future funding and the success of new unproven ventures. The biggest strength here are the pivots themselves, showing an attempt to adapt, but these pivots come with massive risks. The reliance on external financing is a huge red flag, and the fact that they need to raise funds constantly could lead to massive dilution for existing shareholders. The lack of strong internal controls and apparent management concentration of power also pose significant risks. The company is making a big bet on the carbon capture and clean energy space, which is a growing industry. But this is a highly competitive and capital-intensive field. Success is far from guaranteed. In conclusion, Panamera Holdings Corporation is a high-risk, high-reward situation. If their new environmental tech ventures pan out spectacularly, they could see significant growth, but the current financial picture and operational challenges suggest that failure is a very real possibility. Investors should tread very carefully. Alright, that is our deep dive into Panamera Holdings Corporation's 2025 annual report. What do you think about their strategic pivots and financial struggles? Let us know your thoughts in the comments below. If you found this analysis helpful, give this video a thumbs up and subscribe to Corporate Decoder for more breakdowns like this. And don't forget to join our Discord community for more discussion. And insights linked in the description. Thanks for watching, and we'll see you in the next video.